What's going on YouTube, it's Sankey and I make videos on the stock market. As always, I've got a jam-packed one for you today. Before I get cracking, do check out that link down below. If you already don't have a Trading 212 account, sign up and you'll get a free share of stock. So it's shaping up to be a very exciting day in the stock market and there's a lot of big moves in our plays, but I'm going to cover all of that in another video. In this video I want to talk about NIO because they themselves have got a big day coming up tomorrow. They are announcing their December delivery numbers and this could have huge impacts on the share price both ways, up or down. And I want to prep you guys for either scenario so you're not caught off guard and you know exactly what is going on. But first up I want to jump into the NIO share price graph. Alright guys, so check me out. Up on screen we have the NIO share price graph and I must say I'm liking the way that NIO share price is moving at the moment. Now we know NIO share price is consolidating between $50 and $40, somewhere around that region, but they seem to be showing an upwards trend in their share price, right? You can clearly see upwards trend and it looks like that support line is getting higher and higher. And I've shown you guys the exact same thing that happened to Apple. This is what happened to Apple just before they broke through their $130 resistance line. And it's looking like NIO is about to do the same thing if they can just keep positive momentum with their business. So those of you who've been following NIO's share price today, you'll know it's been floating around the $49 mark. It actually did cross 50 at one point, but came back down. So it's struggling to break through its resistance line. And the reason for that is because the volume is not there to support that break of the resistance line. So let me show you guys. If I just zoom in to the volume, you'll see that NIO's volume today is on a downwards trend, right? That's not going to help it. That's not going to support it break through that $50 resistance line. But if we quickly just check on Tesla, now we know Tesla broke through 700. It's been flying today, right? No problem whatsoever breaking through 700. If you look at its volume, right, you can see that's strong volume right there, right? There's no sign of any downwards trend in its volume, so just want to let you guys know about that. So as it's the last day of the month, NIO should be giving us their December delivery numbers tomorrow, and this could have a big impact on the share price, either up or down, just depending on how well they do. Now, to give you guys a picture of what's going on and what to potentially expect, management have come out and said that they expect to do at least 16,500 deliveries in the third quarter, right? So that's October, November, December. Now we know that NIO did 5,555 in October. In November, they then did 5,291, which means in December, they must do 6,154 deliveries. Now this is a big jump from the last month. This is about a 16% jump, considering the jump before that was only 5%. But there are a couple of things that are playing in NIO's favor to hit this number. There are three big things, right, that I want to put on your radar. The first is that we know that they've been working hard on increasing their monthly production capacity, and previously they were only able to do 5,000 vehicles, and I do feel like this was holding them back, right? That's why we saw their competitors like Li Auto and XPeng beat them on month delivery numbers. But now they're going to increase this to 7,500, and if they're able to do this, this is going to help them get to that 6,154 delivery numbers that they need to hit the guidance. Secondly, NIO actually operating with a very large backlog of orders that they're constantly working through. Now the latest figure that we have is 7,000 vehicles, and that was mid-October, and that backlog has been growing rapidly month over month. So I wouldn't be surprised if their backlog right now was sitting at well over 10,000 vehicles. Now it's said to take about 8 weeks to get a NIO vehicle to the customer. That means right now they're working through their backlog, which was in early November. So I can guess that that was probably around 7,500 or 8,000 vehicles, right? Now, if they're able to get through this backlog with their increased production capacity of 7,500 per month, they should be able to hit that monthly guidance number of 6,154 vehicles. The third is that NIO are sitting on a lot of cash, right? We know that balance sheet cash in Q3 was around $3 billion, plus their stock offering that they did, which was a couple more billion. So they're sitting on cash of over $5 billion, which should help them ramp up their production and get what they need to do to get that delivery numbers over the line. So there is always a potential for slippages or delays in the upgrade of their production capacity to Q1 next year, but given the strength and the size of their backlog and how quickly it's growing, this is still a fantastic business that I'm backing going into next year and beyond. It just means that in December we might see December delivery numbers of just over 5,000, but you're going to see a big jump in either January, February or March, right? And we're just going to see a delayed share price increase next year. So in terms of what I'm doing, if they have a fantastic December delivery month, I'm not going to do anything. I'm just going to hold my stock. But if they disappoint investors and they don't deliver 6,000 and they deliver somewhere in the 5,000s, and that share price drops significantly, and I mean somewhere in the region of the mid 30s, then I might consider loading up again, because I do see that share price jumping right back up when they can deliver some serious delivery numbers in January, February or March next year. And do drop me some comments down below letting me know how many deliveries you are expecting NIO to do this December month. So it's question of the day time. This question comes from Shaker. The question is, wanted to know your thoughts on dividend stock. So thank you very much for sending in this question. If you have any questions or comments, leave them down below for me. So as you guys know, I share my growth portfolio over here, but I do have a separate dividend portfolio that I do invest in regularly alongside my growth portfolio. Now, I'm actually going to share that dividend portfolio over at the Patreon with all my explanations of why I'm investing in these dividend stocks, right? So you guys can, copy and invest in those stocks if you wish to, because I do think having a dividend portfolio alongside your growth portfolio is good. It's a good idea, right? It's a good part of building long-term wealth. Now, there's a couple of things you guys should look out for when you're investing into dividend stocks, and they're really important. So let me put them on your radar. The first is that the company actually gives you a good dividend yield, right? You'll see dividend yields from 1% all the way up, past 10% on some stocks, but a good dividend yield, right, is in the region of 3.5%. That's the sweet spot. That's what you want to aim for. 3.5 or 4% if you can. Secondly, you want to ensure that this company is increasing their dividends each and every year, or at least holding them, right? You don't want to invest in a company that's reducing their dividends or cutting their dividends, or has got a history of that. So a good track record of increasing their dividends is what you want to look out for. Thirdly, you want to avoid a dividend trap, and this is super important. So let me jump into the screen and show you guys what I mean by dividend trap, right? So you want to invest in a company that is showing some sign of growth, right, year after year. That is ideal, right? So you want a company that not only pays you a dividend but is a growth asset as well. That's a good combination to have. Now, if you just take a look at this company, if you're investing in this company, 2017, 2018, 2019, you're building up your position, right? You're building up your dividends in this company, but your wealth in this company is actually eroding year after year. That share price is just declining constantly, right? So that is what I mean by a dividend trap. And some of these dividend companies might lure you in with a very high dividend rate, over 5%, over 6%. But they're not managing their business correctly, and year after year your capital is just being devalued, right? So you don't want this. You want to avoid a company or a share price that is looking like this if you're investing in them for their dividends. Now, I just want to put a couple of companies on your radar, dividend companies that I like. One is JP Chase. As you can see, over time, over the long term, they are showing signs of being a growth asset, right? You can see an upwards trend in their share price. Obviously not like the growth assets, the penny stocks, that we share over here that explode, 40% in a day. But over time, there's that gradual increase. So they've got that growth element to them. And they have a track record of increasing their dividends, right? 10-year track record of increasing their dividends. And they pay a dividend of around 3%. So JP Morgan are ticking all the boxes as a dividend investment. The second one is AbbVie, a slight element of being a growth asset here as well over the long term. Very strong track record, 49 consecutive years of increasing their dividend. So this is good. This is what you want to look out for. And icing on the cake, their dividend is over 4%. So this is another good one to put on your radar if you're considering dividend investments. But guys, there's a whole heap of other companies if you're considering dividend investments. So as I said, I'll put that all over at the Patreon. so you guys can take a look and see and invest in those companies and build your wealth in them for dividends. So that brings us to the end of the video. Please hit a like, it really helps the channel out. If you're new, do go ahead and hit that subscribe button. I post each and every day. And as I always say to you guys, stock market is rapidly moving. Do check in this channel each and every day so you never miss a beat. And I'll catch you guys in the next one.